Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds, and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly support, which was acting as support all across that zone, which is now turned resistance. Now, as we are testing previous support turn resistance, we could expect a deeper test of that zone before then getting rejected to the downside. In fact, at least at the moment, we can see how the market just rejected to the upside. And in a situation like this, especially since we had a very strong correction, we could expect a bit more bullish price action for a deeper test of this resistance. So essentially, to have some short-term bullish price action and then longer-term bearish continuation. Now, dropping down on the weekly, what we can see is that from a weekly perspective, the market just tested quite strong previous weekly support, which is currently still acting as support in a situation like this, as the market is actually already starting to reject it to the upside. More bullish price action could be expected away from this zone. Going down on the daily, what do we have? Now, here on the daily, the price action is quite clear. We have a market which has created a very strong impulse to the upside and currently is creating a correction. And in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market is currently testing that zone, which is in between the 0.32 and 50% of the Fibonacci taken on this impulse leg, which is also currently lining up with previous resistance turn support, creating confluence of support at this zone that we could expect the market to potentially reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which as we were saying previously, is what the non-commercials in the market are doing, so the biggest speculators and institutions, what we can see by looking at the data for the pound is that with the last reports, net positions in the short term have been decreased. We went from minus 5k to minus 19k net positions. However, if we look at the long term, we went from having a very low minus 68k net positions with 109k shorts and only 41k longs, all the way down to now having only 61k shorts and more or less the same amount of longs. So in the long term, shorts are getting decreased from an institutional perspective, which could make GBPUSD get a bit stronger, at least for a deeper test of that resistance. So there is at least the possibility for this potential move to the upside. So how we could be approaching this potential move. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.